Hey guys, and welcome to my YouTube channel. Actually, been going on. Trading has been going on. So many things. Okay, so many things has been going on behind the scene. All right. So, if you're new to this channel, you're welcome, and also do well to subscribe and hit the like button, and also turn on the notification bell icon so you don't get to miss any video anymore. All right. So, today I said to just come on here, all right, and give you guys how it has been so far, all right, how it has been so far on the channel. And yeah, basically I've not been active on YouTube doesn't mean I've not been active on other social platform like our Instagram, our Telegram has been active back to back, okay, 24/7. It has been very active. We've been taking trades of the community, we've been taking trades, and we've been winning, all right, we've been winning. And I just want to share some updates you guys, okay, stuff I got to see, like opportunities I got to see on the market, okay, over this period of time. All right, basically I've been day trading, okay, and I've been day trading here most of the time because I'm basically a day trader, and I've been into gold, gbpusd, and gbpjpy. If you can see previously my previous charts, you see different currency pairs. Alright, but now I've said to just focus on these guys here, these three. Alright, GBP GBP JPY, and gold. Alright, because my strategy needs volatility. Alright, so that's the way it is. Alright, so uh things have actually been going on behind the scene, like I always tell you. Alright, so many things have been going on. Right, and today, okay, I just want to share with you and or show the community some very important trading tips. Okay, I want to give you some trading nuggets, all right, so you can have a fresh week. Okay, this week that's coming up, you just need to apply this nugget I want to share with you, and you see how far it's going to give you some insane amount of result. All right, so basically, right, as you know, we have to first of all start from market structure and the rest. Okay, looking into market structure, basically market structure is the kingpin. Right, I will always remind you, market structure is basically what you need to be looking out for. As a day trader, I'm not all that interested in the weekly time frame. All right, what I'm actually interested in is the daily time frame. Okay, so I come to the daily time frame, I identify my high and low. Okay, these are my high points. Okay, these are my high points here. This is another high point. Let me just tweak it to the line chart so I can get very accurate touches. Okay, this is another high point here. Okay, these are very sensitive points on the market. Okay, so this is another high, this is a high, this is another high. All right, and then here also uh here also is a very sensitive high in the market. Let me change this guy to this horizontal line here. No, there are two, but I don't know if you can see two of them. There are two lines here. See, alright. So let me delete this and bring this guy here. So these are very important lines. I'm drawing very important support and resistance line. Alright, here is also. And once I change it over to the bar charts, you see the magic behind these guys here. Alright, so this also, okay, this will do. Let's just stop here. Alright, I would like to identify this also as an intraday high. Okay, this is an intraday high and low point and the rest. Okay, so let's switch it back to the chart. Okay, so these are all highs. Okay, these are high points. All right, these are high points, This is also a high point. This is also a high point. Right now I'm connecting with a trend line. I'm connecting these three high points together. Alright, I'm connecting these three high points together. Okay. Yeah, so now I've been able to identify the high. Okay, now I'm connecting the three low points together. Alright, let me connect the three low points together, these low points here. Alright, as you can see here, it's actually forming what? A pattern. Okay, the market is forming a pattern on the daily time frame, as you can see here. Right, this is more like a bullish triangle. Okay, a bullish triangle. Alright, a bullish triangle, you can call it a falling wedge. Alright, so the market is creating a pattern here, as you can see. Alright, they touch one, touch two, touch three, bounce. Here also bounce. Alright, so we're expecting a break to the upside or a break to the downside. Okay, depend on the market movement. Alright, so here now I want to show you guys how I'm able to catch intraday swings. Okay, I'm able to catch intraday moves, right, especially during the London section. Okay, so I switch over to my 4-hour time frame. Nothing much really going on here, just the fact that price is also reacting based on the lower time frame. So I come on here. Okay, I identify structures. Okay, so this is the structural high. Price likely here, bounce, bounce. Okay, here also. All right, connecting it here. I'm looking what is the market reacting to. Okay, there are areas where potential support and resistance. Okay, this is a support equal resistance level here. You can see how well the market gradually broke it through, and once it broke it, retested and pushed up. Okay, so this is a resistance level here, a support equal resistance around this area. So the market reacted to this level here. Okay, as you can see here. All right, so now I just use this 4-hour time frame to basically check what's up, what's going on. Okay, I like to see candle close on the 4-hour time frame. Okay, I like to see what type of candle closed on the 4-hour time frame. Okay, is there any engulfing pattern on the 4-hour time frame? If yes, okay, is there an opportunity to go long or go short? All right, so these are things I ask myself very fast. Okay, I don't just wait till I don't just wait. I was asking myself this question. These are things I just see them and I recognize them. Okay, so heading on. All right, so as you can see here, the market has been on a downtrend. Okay, high. Okay, more like a retracement. We're expecting the market to also push down. Okay, but the market can also do what? Retest this level and decide to push up. Okay, but where we're actually going to see a clear confirmation if the market wants to do this is on a lower time frame, like 1 hour, 15 minutes and the rest. Okay, so I just come here and check out what's up with the candle close. Okay, after 4 hours, what type of candle closed? Okay, is it a candle that is telling me to continue buying, or is it a candle that is telling me to sell? Okay, so I just check what's up with the candle, and I go down to the 1 hour time frame. Okay, I go down to the 1 hour time frame, and now this is where my strategy comes into play. Okay, this is where my strategy comes into play, because I trade using stochastic oscillator. Right, so now despite the whole cloud here, okay, it is something uh, I- I've gotten to understand over time. All right, this is something I've developed myself to understand over time. Okay, so now uh you may not really want to wait for price to cross over at overbought or oversold regions. Okay, these are things I personally developed myself. Okay, these are things I personally developed myself and see yeah, is the market actually going to sell even if the market is overbought or oversold? Okay, so you may not, I'm not saying you should wait for the market to get to overbought region before you sell. Now the stochastic oscillator works with the trend. Okay, it's a trend based oscillator. Okay, so if the market is trending down, okay, areas of interest for me, okay, now let's say this market is trending down. Now you can see it's trending down. Areas of interest for me are overbought regions. Okay, once the market gets to a region of overbought, I'm looking for structural in play. Okay, I'm looking for structure to play out, okay, properly. All right, so the market here, okay, is overbought. Okay, it's coming down. Okay, next here comes here, crosses over. Okay, upon this area here, I should be looking to sell this market. Okay, then it gets somewhere around here. I may not really be interested in taking over here, but if I'm combining them with my trend line, okay, which is my 52 moving average, all right, this is below. Okay, I should be looking to sell. Once the market is below or above the trend line, I take actions. Okay, I take actions based on my trend line. Okay, so now let's look at this. Let's look at this guy here. This is a clear sell, a clear short opportunity right here. Market tested the trend line, overbought, opportunity to sell. Okay, here also the market came to this region. Okay, understand liquidity grab also. Okay, so the more basically strategy, okay, on the foreign exchange market is basically your level of experience. Okay, you have a strategy is basically what level of experience do you have on the market. Okay, what knowledge of the market do you have? Okay, if you just come to the market and you just see, okay, higher highs and higher lows, okay, you build your strategy of higher highs and higher lows. Okay, if you come to the market, you understand liquidity grab, you understand imbalances, you build your strategy around those knowledges that you know. Okay, any knowledge you know is basically this the bedrock of your strategy. So the more you know things in the forex market, the more you improve your strategy. Okay, previously when I was still coming up as a trader, okay, in as much as I'm still growing, all right, um I didn't know anything about imbalances. I didn't know why price react to this level. I didn't know supply and demand. I didn't know so many things. Okay, what I just knew was moving average, trend line, and the rest. And I was building my strategy off trend line and moving average. It got to a particular point, those stuff were not efficient anymore. Okay, so I had to divert. I had to look for better opportunities. Okay, so now understanding demand and supply, I know that once price comes to this area here, okay, once price comes to this area here, I should be looking to short the market. Okay, why? Because it took out this low. Okay, this low here was taken out, retested, pushed down. All right, once price gets to this area here, all right, this is an area of supply. I should be looking to sell this market. So once I'm in this market, once I get uh once I see opportunities around this area here, okay, I should be looking to short this market. All right, these are very, very important things. Now the next area of short, okay, the next area I'll be looking to short is this area here. Okay, why? Because the market broke this structure. This was the last bullish structure because it took out this high. This was a high. The market wanted to react to this level to go down, but it broke it. Okay, so the market broke this high, right? This was the structure that broke this high. So now this is now a level of demand, right? So the market pushed up. Now once it breaks this level of demand, okay, or this last lower higher high, okay, high, okay, so the market will likely come back to retest it, which is what the market did here. So I will be looking to short this market upon a retest of this level here. Okay, so the market will retest this level. I'll be looking to short it. So now once it comes back here, I know this market, this area is now invalid. All right, so I'm looking for the market to keep on pushing down. Alright, so if I enter this point, my stop loss somewhere around this high here. Okay, I don't really like opening my stop loss too wide. Alright, so now the market takes out the structure. Okay, the market has taken out the structure. I need to look at where it took out the structure. Okay, these are things I teach. Okay, I teach my student most of these things. Okay, once the structure is invalid, okay, once the structure has been taken out, now what you need to be looking out for is which area took out the structure. Now I've been singing this, I've been preaching about this over and over again. If you check almost all my videos, you see me talk about this over and over again. Okay, some most people call it order block, but I prefer calling it source. Okay, now this is a structural low. Okay, this is a structural high. All right, until the market breaks this, creates a new structural low, either this or this. All right, then you can say a new structural low has formed and a new structural high has formed. Okay, so the market actually broke it. Okay, from this area here, this was just because this is Asian section. Okay, it didn't really form too visible. Okay, but you can also use this area also. All right, this was a low, we tested here. Okay, and now the market pushed down. All right, the market pushed down in this area. Why? Because uh it broke the structure, so now this becomes a new structural level. Okay, this becomes a new supply zone. Why it became a new supply zone is because it took out a structural low. If it doesn't take out a structural low, let's say for instance now it comes back here and create double bottom. Okay, let's say this guy comes here, price will likely with double bottom push and break through this guy here. All right, let me see if I can see something like that um coming up. Okay, something like this. Okay, this could be seen as a double bottom. All right, so price came here, broke this low. All right, let's say it broke it here. All right, now you see the price came and retested this level here. Okay, price came, retested this area here, looking for more sell, but it could not find. Okay, came down a bit and pushed. Okay, now the market came back and broke it. All right, so these are things you need to understand, certain things in the market. All right, you need to understand certain things in the market, and they are very important things. All right, they are very important things. Like whenever a structural low is broken, okay, the new structural high, okay, becomes an area of supply and demand. Okay, it becomes an area of supply. The new structural low becomes an area of demand. All right, so all these things they change over time. All right, they change over time, and supply and demand levels, to me, I only use just once. Okay, multiple touches make it a support and resistance zone. Okay, but once it gets contacted with just once, is a supply and demand level. Right now, forging on, now the market breaks through, retested this supply level. Why? Because this area broke a low. As you can see what I'm telling you, it broke it. Now it retested it as a supply level. Alright, we tested it here as a supply level but could not find liquidity. Okay, tried it again, there no liquidity to break. So now the market did what? Double bottom, broke through, coming to this area here. Alright, I always tell you the market moves from one liquidity point to another liquidity point, one liquidity point to another. The only way a market can break two or more liquidity points is when there is volatility in the market. All right, when there's volatility in the market, something like this. All right, the market can break one, two, and the rest going down. But if the market is at moderate volatility, all right, the market will push from one to the next level, look for liquidity. If it doesn't find, it will move to the next level, look for liquidity. If it doesn't find, it will keep pushing. All right, keep pushing till it finds area of either equal buyers or more sellers or equal sellers. All right, so these are the things that happen in the market. All right, so I make use of my stochastic oscillator, very powerful. All right, if you want to learn my stochastic strategy, all right, you could send me a DM on Telegram. All right, I could add you to my community of traders. The link is in the description below. Okay, so I make use of my stochastic. All right, the stochastic is a very, very powerful oscillator if you know how to make use of it. All right, this is not a sponsored post for the stochastic or whatsoever. I'm trying to tell you from what I've been using so far. Okay, I make use of my stochastic and my moving average only. Right, you don't see me make use. I don't use any other indicator apart from my moving average and my stochastic oscillator. Alright, so these are what I make use of. Alright, so whenever the market is either overbought, depending on the trend, okay, you need to understand this. It is trend based, okay, and I'm interested in riding trends. I'm not interested in a ranging market, not at all. I'm not interested in that kind of market. I'm interested in a trending market. So whenever the market is trending, I'm looking to go long. Please, one sec. So sorry, I'm back. So like I said, yeah, whenever the market is trending, okay, this is a very healthy trend. You see, from this point to somewhere around here, it's a very healthy trend from this point to this point, right? So, and especially, I don't trade every time. Okay, there are specific time I enter into the market. I love trading London section. So, 10 minutes to London section, I'm actively looking. Okay, once it's London section, analysis are in check. I just enter into the market. So now let's say I want to enter into the market from this point. Now I combine three things. Okay, my stochastic. Okay, let me say four things, including my but market structure is by default. Okay, but let's say four. Okay, I look at the structure of the market. Is the market breaking highs or is it breaking lows? Okay, if the market is at equal lows or equal highs, I look at X, like leaving the market when the market gets to an equal high. Okay, and also I use my trend line, especially if I'm catching reversal move. I use my trend line as an exit point for reversal trading. Okay, I'll be sharing with you in other videos. Okay, reversal trading or how to exit, because most people don't know when to exit a reversal, more like a retracement. Okay, most people don't know when to exit a retracement, and they can be in a very good move, okay, and all of a sudden you see the market reverses against them. All right, something like this. Okay, you may decide to buy from this point, all right, and you get to somewhere around here, the market smashes you out. Okay, there are ways you can actually know when the market or where to place your stop loss. Okay, sorry, your take profit levels. You can decide to use imbalances, right, to place your stop loss level, because normally here I know the market will come back to fill up this imbalance. Now I can see this is the tail. All right, the market will likely touch this and react to it, which it likely did. So my TP1 basically will be here, and I'll move my stop in profit. Okay, but I don't see the reason why I will enter this trade. All right, as long as the trend is bearish. Okay, so imbalances is another way. All right, moving average is another way I use to exit retracement or reversal moves. All right, so if you check very well, okay, you check properly, you see that the stochastic oscillator is something that you can make use of, combining with my trend line, with the trend line. Okay, so here now we can see that here, look at this point, the moving average is below, price below also, stochastic at overbought region, crossing over here, we sell from this point. Okay, you sell and you enjoy your take profit below the, lows. Okay, and here also somewhere around here. You can see the market was not really doing much, but still yet there was still a respect of stochastic, right? You can exit somewhere around here at this low, because you can see that the market broke this high, so you should be very very careful. All right, it's most likely to become a change. All right, whenever the market breaks a high or a low, I'm always very very careful. All right, so here also you can see the market after breaking, market became oversold, so now the structure have changed partially from being bearish to bullish. Okay, so the market, you can buy this market all the way up, okay, reaching in for this liquidity here. Based on demand and supply, I'll be looking to sell this market here. So you can see how dynamic strategies could be based on your knowledge in the market. Okay, based on your knowledge in the markets, that is where your strategy falls under. All right, so here now I'm looking to sell this market from this point, even if I don't get it, because of this engulfing here. All right, and also the time of the day. All right, into London and New York section, I'll be looking to short this market here. All right, so it has broken the structure here, so the trend has changed by default. Okay, it broke the structure here. All right, the trend has changed by default. If price came back to retest this level, it would have still been bullish. Okay, but as long as it broke this structure here, this low, the market has changed by default to being bearish. Right, so you go down to the 15 minutes, you see a structure going on here around here. Right, so now the market will test the structure and now goes down, equal lows, comes back to the source. So these are things that happen over and over on the market. Right, so time of the day is very very important. London section, volatility period. Okay, these are very important period. Okay, you need to know that you need volatility in the market. All right, these are where traders are involving themselves in trades. Okay, so you need to be where people are, where traders are. All right, so now I've seen that the market is running at this particular point in time. Maybe let's say the market in by 12 a.m. in the morning, the market is always volatile because people are involving in trades. Okay, those are the time I need to be in the market, because I don't want to be in the market where people are not really interested in. Okay, volatility, there will not be volatility. Okay, the market may spend hours just to make 10 pips, 20 pips. Normally something you can get when people are trading actively could get 60 pips, 30 pips, right, just easily. Right, but when people are not trading, when the market is low on volatility, you could spend 5 hours, 10 hours, maybe at the end of the day you get smashed out because you get frustrated. Right, but if you are with the big players, okay, the time they play, you also play, you get good moves. Okay, do your structural analysis, do your analysis, go into the chart, have just one or two confluences that will tell you, okay, manige is good to buy, is good to sell. Okay, have those confluences and you're good to go. So let's check the 15 minute. 15 minutes is also uh 15 minutes is also very very crucial. Sorry. All right, 15 minutes is very very crucial. Okay, on the forex market. Okay, 15 minutes is a very crucial time, right, because it's basically what day traders make use of. Right, day traders, inter like scalpers, day traders, 15 minutes is a very good day. So I use 15 minutes for specific things, okay, which I may not really be sharing in total. All right, I use the 15-minute time frame for specific things. Now I use the 15-minute time frame to add more positions to my position. One, I use to set stop loss and take profit levels, or basically stop loss levels. And I use the 15-minute time frame to know when volatility is pushing into the market. Now, I would love to really explain this, but let's call it. Now let's say you take a trade off the 15-minute stochastic here. The moving average is same buy. Stochastic has crossed over, oversold. One win, moving average buy. Two win, you can see the ride. The next one, three win, okay, four, five, six. So if you are taking this trade, all right, if you are taking this trade off stochastic alone, you see whenever the market gets to overbought region, you see how it spends time. Even while it's overbought, the market can still be buying, all right, because of the trend. You understand me? Let's call it a day at this point. Okay, in subsequent video I'll be picking this individually. Okay, I'll be picking this individually and I'll be showing you guys. Okay, it's very important that you see what I see in the market. All right, so for today, guys, thank you for joining in. All right, thank you for joining in. I really do appreciate. Okay, and if you're new to this channel, please subscribe, like, hit the follow button. Okay, follow us on our Telegram channel. Okay, our Telegram community is fast growing. Okay, fast growing. All right, I wish I started Telegram YouTubing when I started my Telegram community. All right, would have been on a different level, but nevertheless, now is a very good time to start. Okay, so guys, support the community and see you on the other side of profits.